All right, everyone, welcome back for another episode of Carnivore Trades. Today is Tuesday, September 28th, 2021. So markets really puking today. Got a nice bid off the lows finally, and then really just rolled over. So showing a lot of weakness here as we look at the intraday. NASDAQ, the big loser, down 2 3/4. S&P down 2% now, and Dow at 1.6. Russell down 2% as well. Looking here on the daily, this is why I said we're not out of the woods yet. I pointed this out immediately Monday. We broke this trend, and I said it was kind of silly for people to be bragging about how they're buying the dip on Monday. I mean, why would you buy this dip? This dip's fine. This dip's fine. This dip's fine. That dip's fine. I could even see that dip, and then you could stop out when it closes below. But why would you buy this one? This one is telling you that there's a trend change and that we're probably going to see some test of lower prices. A 10% correction would bring us down to the 200 moving average. That's your dip to buy. You don't buy this dip. I just think that's silly, and it just goes to show how conditioned traders are to just buy every dip, no matter if it's 3%, 2%, 0.5%, 1%. They just buy everything, and they ignore the obvious technical indicator that's telling you that price trend has changed, and things are a little different now. So I just think that's silly. But by the way, the 618 held up perfectly. I know I've showed you guys this, and this is very common for a market to, when you have a sharp leg down after a rally, you usually have a 50% or a 618 retrace. We got right there, and that is held beautifully. So nice job there on the fibs. And market's really rolling over. Now the question is, do we bounce tomorrow? And if so, how high? I think 438 is a good line in the sand. We'll also have this gap window right here at about 440 or so, and then maybe gap fill if the market gets up there. But I don't think the market's got enough juice to get here in the near term, and I do expect us to move lower. So I think we will be looking to sell the rip here. That's the kind of mode we're in now. I talked about being in a, the yield pushing us into a risk off mode. Now that's still in play, but there's got to be rotation first, and this market is in rotation mode. I know that because JPM is holding up. It's basically flat. XLE is positive. XOP, which I told you was going into resistance yesterday, look at that reversal. That's into resistance, but that's holding up well. Crude, again, getting in a double top, but holding up well. That's telling you there's positive money flow. Even if the market is red, there's still sectors that are seeing money flow. It's not a mass exodus. It's not a super broad-based decline. Even with the Russell down 2% here, it hasn't made a new low. It's made higher lows. So until these lows get taken out, we have to give the Russell the upside bias, and we have to assume that once this rotation shakes out, there will be some type of risk on. At least that's the way that things are shaping up for right now. Semis getting hit a little bit. You guys know I look at the semis as a leading indicator. They're going to close below their 50-day moving average. But again, this is based off of yields. And when we have other sectors holding up, like fins and energy, we have to kind of give the market a bit of an upside bias longer term. So, near term, the market can come under pressure, and we can, have a shakeout, maybe a return to the 200 moving average. But there's no reason to think that this is a major top just yet. And that's just kind of where I stand right now. Speaking of energy, nat gas, look at that tail candle there. I want to show you, I was going to short this with the patrons earlier today. So nat gas sold off pre-market, but look at, I had this alert for this morning, 9:22 a.m. and nat gas really just started dumping, and it started dumping pre-market, honestly. And I was hoping we'd get a bit of a retrace to short it and enter a position in KOLD, but never just got there. So we'll see what happens. Maybe we get a retrace tomorrow, but I don't think we do. I think it gets down to 550. And I mean, this thing was just really extended. We played this to the long side with Boyle, made some nice money. Would have been nice to make it some more money on the short side, but that's just how the dice roll sometimes. But look how extended this was on the weekly and the monthly. It still is, and there's nothing to say it still can't take out that high. I mean, it is in an uptrend, and it is getting parabolic, so there's nothing to say it can't. But there's a lot of volume there, and that was a pretty big reversal on nat gas. So that could be the interim top there for Natty. Let's just quick look at the dollar index. So Dollar index is making a year-to-date high, basically an 11 or 10 or 11 month high here. This is your previous high pivot in November. And we've been bullish dollar really since March, and we had this pullback here in May, and that was a buying opportunity. This thing just got so crowded to the short side. Everybody wanted to be short dollar, and that's what happens. You get that sentiment all in one direction, and then you get the short covering, and then rip your face off rally. Now dollar making higher lows. It should get up to that 94.50 handle in the not so distant future, and that may coincide with a 200 moving average hit on the SPY. So bear that in mind and be on the lookout for that. But anyways, guys, I'm just going to keep it short today. You guys take care. I'll probably do a live stream later for patrons. We'll see what happens there. But anyways, yeah, take care. We'll see what happens tomorrow. And you guys have a good rest of your night.